So let's look at the second part of trading as a business, and let's look at a realistic outlook of earnings. Now everyone's going to be different, but let's say a minimum target that we might be able to set is 95 pips in a week. If that's the case, then how do we decide the amount per pip to bet? Well, we're going to come to that, but let's say it was £10 per pip. That would then be £950 in a week, of course, which would be £3,800 per month, which would be £45,600 per year. How do we then actually do that? Can you do 95 pips in a week? Can you afford to risk £10 per pip? How do you make those decisions? Have a look at this chart. And it's focused on FTSE 100 as an example. And what I've done is I've listed the various time frames you might be looking at it. So let's just start off with the 1 minute one. The number of signals that tends to give on my own indicator in a week on the 1 minute chart, 85 signals. The typical price range in that period, in that 1 minute, tends to be only 1.5 pips. And if you take a stop loss, therefore, of 2 times that, then you've got a 3 ATR stop loss. At £10 per point stop loss, you're looking at losing £30, of course, if that happens. And the capital you'd need, if £30 was 2% of your trading capital, would be 1,500. Okay, so what this chart shows you is how much you'd be losing if you had a 2% of capital stop loss and were betting £10 a point. And you might say to yourself, well, wait a minute, I've got a lot more capital than £1,500. That's fine. Then you know that you can bet more than £10 a point. Because if you've got 10 times as much capital, you've got £15,000, then you'd be betting £100 a point in that example. Similarly, let's look at the other end, 1 day time frames. The number of signals per week is about a quarter. In other words, what that means is that in actual fact, every 4 weeks you get 1 signal if you're looking at the daily charts. And the typical price range in period in any given day is about 65 pips in a day. So your stop loss would be 2 times your daily range based on my stop loss methodology, which I've put in a different video. So if your stop loss is 130 pips, then at £10 a point, you'd be risking £1,300 if your stop loss was hit. Therefore, you'd need £65,000 capital on the basis that you don't risk more than 2% of your overall capital on any one trade and any one stop loss. If it's 1,300, would mean £65,000 is how much you need, and you're getting 1 signal every month on the daily. So you can see how a lot of people would say, okay, look, I've got £20,000 in capital, therefore the time frames I'm going to pick are either going to be 1 hour or 30 minute or 5 minute or 1 minute based on these criteria. And can you capture 95 pips in a week? Because remember, I've said how many signals there are and how much is the range in each period, in each minute or 5 minutes and so on. Well, what does that mean for us in terms of how many pips we could capture in a week? So let's look at that chart again. This time you've got the 1 minute. Number of signals per week, remember, is 85. 2 times your range is 3 pips. Points captured on a win per week, because we assume we're only correct 50% of the time, and we assume that we capture 3 times our range when we're correct and lose 2 times our range when we're wrong. Okay, so I did the maths for you, and what that means is the points captured on wins per week is 765 points. And the points we lose, if we hit all of those signals, those 85 signals, half of which will be winning, which is when we do 3 times our average true range, half will be losing, which is when we lose 2 times our average true range. This is what it works out at. So the net points gained per week on a 1 minute chart will be 255, well above our 95 pips per week. 5 minutes, it gets to 100. Anything below the 5 minute charts, and suddenly we're not making our 95 pips per week. So what do we do there? How do we get to our 95 pips per week? well, and hit our profit targets that I showed at the start to make this into a business where we're earning £45,000 odd per year. How do we go about doing that? Well, what we need to do is either we trade shorter time frame. Well, that's not feasible for many people. But if we were looking at it, how do you do that? Well, after work, you could do the short time frame because you need to be in front of the computer to do a 5-minute chart. So you could be right in front of the computer and you do that because the market's open till late. In the case of the FTSE 100 until 9 p.m. at night, and in the case of foreign exchange, open 24 hours a day. So that's one way you can get a lot more of those signals. The other way is to trade less frequently but with more capital. You double your initial trading capital size and capture half as many pips. So instead of 95 pips, you only need to do 47 pips now, but you do £20 per pip, let's say. So the profit target's still the same, but because your trading capital's doubled. Or another way is you increase your risk per trade from 2% to 3%. If you still know you will have additional risk capital imminently, that's one reason why you might say, I'm willing to take more risk, but I'll increase to 3%. If you're willing to increase from 2% to 3% per trade, then you can capture fewer pips to get the same profit target, because obviously you're taking more risk. But of course the downside is you're taking more risk. So basically, your trading profits depend upon the trade frequency, the trading capital, and the trading risk. Those are the things and the factors which will affect your ability to profit. Because your source of trading profits are all of these things. Your discipline, of course, your win-loss ratio, the number of trades you place, the capital that you have, your ability to cut those losses at a 2% or 3% loss, and your ability to run those wins. That's all the things that I captured in this presentation. Essentially, the most important thing is going to become how not to ever give up. Because essentially, when you look at all of this, and look at this chart, is that you're going to have to keep on placing a lot of trades in order to succeed and find those winning ones. Or as put it this way, as Michael Jordan had missed over 300 important shots, you're actually going to have a lot of failures. So one way is to lower those expectations on those targets. The most important thing is to stay alive and keep on playing the game. That means cutting those losses short so that you're in the game, persisting through all of those losses, not comparing to and saying, oh, well, why haven't I got lots and lots of wins? Why aren't I already a wealthy hedge fund manager? Those are all going to be all the critical, important factors necessary in order to succeed in this. But as I've already shown you, and I want to just go back to the most important two charts, when you look at this time frame, 1 minute, the number of signals per week that you're getting on my indicator, buy and sell indicator, the typical range, which means that a £10 a point, the amount of capital that you need if you're risking 2%, the next step then for you to calculate on that is how many points would you then be capturing when you win, how many when you lose, and what are the net points therefore gained. So as you can see, I've given a pathway of how you can actually hit those original targets that we had and the methodology by which to do it. It's going to be a mixture of the times you trade, the frequency you trade, the risk you take, the amount of capital that you have. But it is quite clearly doable based on the evaluations that I have shown you.